A few moments ago, you mentioned the Airbnb short-term rental loophole. What are the specific hours that you need to do?
But essentially, it's just like you buy any house, you're going to use it as a short-term rental. So you can put on Airbnb, VRBO, you can have your direct booking site. But the key thing is that you just need a lot of short stays.
W-2 employees with side hustles. When do you think they should start an LLC? Like say they just started a side hustle right now. Do you think they should wait for later till they're making much more money, or should they start an LLC right away?
If you have some appetite risk and you're in California, skip the LLC. Just because if you have an LLC, it's going to cost you $800 every year to maintain.
W-2 or 1099, which one has more tax savings opportunity? Hands down.
1099. Yeah. Actually, that's another one of our strategies. Sometimes just ask them, like, can your employer switch you from W-2 to 1099? And then, like, dude, we can like make it rain all day. Like, literally, if we do that, it's probably like $30,000 like, instantly on a six-figure income. Two areas where the IRS likes to poke holes at and like deflate you, and they love poking at.
All right, guys, welcome back to The Lowdown. Today's episode is a must listen, especially if you're an entrepreneur, real estate investor, or just someone tired of giving the IRS more money than you have to. I'm sitting down with Tony Hoong, aka the CPA Dude, and he is not your average accountant. Tony breaks down complex tax strategies into simple, practical moves that help business owners, investors, and W-2 corporate workers keep more of what they earn. We will talk about the biggest tax strategies people make, how to set up your business the right way, and real actionable strategies that can literally save you thousands. So make sure you guys stick around until the end, because this is episode you will not want to miss. So Tony, welcome to the show. Appreciate you coming on.
Thanks for having me, man. This is going to be fun today.
Yeah, of course. So how did you get into accounting and tax strategy in the first place?
Oh, it's pretty random. So classic, like Asian mom, dad say, hey, you got to be a doctor when you grow up. So they had me brainwashed since I was like a young kid. So like when we're in the grade school, you have to write this letter to yourself and then you give it back to yourself in your senior year. And then like in that letter, I said I was going to be a doctor already. So then I like did the whole like biology thing and then went to university the first year. And then, dude, it was a struggle. I got like straight B's. My dad was like, dude, you're doing nothing with your life. So then he was just like, all right, peace. So he bought a restaurant and then I just ran that for him. So I did that for like a year and a half. And then my mom was like all about like education. So then like, we're like, okay, like he's got to go back to school. So then we sold that restaurant and I went back to school. I'm like, what should I study? And then accounting seemed very practical after running a restaurant for like a year and a half. And I was like, all right, let me just do accounting. So I just picked it like that. And then next thing you know was like, oh, you do accounting, you get brainwashed like, oh, you got to do big four. Like, yeah, work at KPMG, PwC, and did that whole route. And then so I went to KPMG. That's where I started my career. So I just kind of fell into it. And then they're like, at that point, you're kind of pot committed where like you studied accounting, you might as well just get a CPA license. Like, why not? So then I'm like, oh, okay, let me just do that too. I didn't really know what was going on per se at that time. So I was like, all right, let me get a CPA license. Now I have it. And I mean, that was probably actually one of the hardest things I've done in my life. Like, it's one of those things you just have to work. You don't know if you're actually going to get it or not. And that was like 9 months, 12 hours a day studying straight.
Damn.
Yeah, because the pass rate's like under 50%. Like, yeah, you don't like happen to just stumble upon a CPA. You actually have to work for it. So got that. And then finally was just like, did the whole corporate thing. But I was like raised in my parents' restaurant since I think they put me to work since I was like 11. Like just good old child labor. and then like I was just, my dad always like, oh, you gotta be an entrepreneur. And then I didn't. And then I think like inside of me, I was like, I got to. So I did KPMG for a couple of years. And then I moved out to the Bay, originally from Minnesota. And then moved out to the Bay. Yeah, exactly. A Midwest boy over here. And did the whole like tech thing. So I worked at Uber for a year and a half, 2 years, and then DoorDash. And then I was like, dude, no, this makes no sense to keep on working for the man. And I was like, I got to peace out. Like, it's not my thing. So that's how I got into like the whole accounting part. And then the tax strategy part was actually like, kind of by design by my parents, but kind of not, because my parents, like, my mom taught me some few things because they had their own Chinese restaurant of like how they like save money on taxes. And then I kind of got a little bit into it. And then at the same time, once I like dove right in, our clients at that time, I only did like tax returns back in the day. Then I just talk to our clients. We're like, hey, how can we help out? They're like, oh, you got ways to save money. And then I just went down like a massive rabbit hole, like unlocking like everything. Cause it was like, all right, parents had real estate, could practice there, and their business could practice there. And that was like W-2. And I was like, oh, what can you do? wasn't a lot. So that's kind of like how I stumbled upon like tax strategy and just like really just like went heads on into it. Cause it's like once it's like your own money, you actually care.
For sure.
But like when it's like other people's money, but it's like, yo, I got real estate, how I save money. Oh, I got a business, how I save money. Oh, I work
Hmm.
W2, how can I save money? So I think having that opportunity, like, oh, my parents got some stuff going on, I got some stuff going on, and like caring about our own like wealth to like preserve that versus us giving away to the government.
Yeah. Why do you think there's such a big disconnect between like why don't all tax people know how to do all these different strategies? I think it should be the thing that you learn first.
Yeah.
You
Uh-huh.
know, like
Oh,
why is that most people don't know half these things as far as like being a CPA? Like I know there's a lot of bad ones, especially maybe ones that work at H&R Block that just they just don't know all these different things. So why is it that you think there's such a big disconnect?
yeah, the biggest disconnect is just because it's not trained, like, more like so the accounting industry is horrendous, dude, like, it's like you're just going, you got hella volume, and you just have to get the returns in, out, in, out, in, out. So they're so reactive, there's, like, actually no time to, like, sit down and be, like, proactive with your people. So most people that go to, like, tax shops, they just learn how to do compliance to tax return work, and they don't even have time to learn how to do, like, the advisory work. And then the other part about our industry is, like, no one trains. Like you're just thrown into the deep end, like sink or swim, dude. And that's it. Like if you're at H&R Block, they actually have like this 2 week immersion program. You just like they've created this whole training thing on how to use your software and everything. So you
Hmm.
just like get thrown into like H&R Block Kool-Aid and you just drink that till it works. So it's there's just a really lack of training and the industry is just so reactive, not proactive. That's the biggest part too. And there's not as many people that use tax strategy services. So everyone, their mom has to file a return. So that's why like a lot of people know how to do it, but not a lot of people are into like the saving the money portion. So that's why there's like a big gap. Like, hey, not every CPA is created the same. Like there's some CPAs that do filings. There's some CPAs that are strategists. There's some CPAs that do it all. There's some people that only do audits, like forensics. So there's actually like specialties within being a CPA. It's kind of like not all doctors are the same,
Yeah,
right?
that makes
Like
sense.
there's specialties within it.
Yeah, that makes sense. You're definitely a diamond in the rough because most CPAs are not as well versed as you. So when did the CPA dude come into fruition?
CPA Dude was December 2019. So it was kind of like I had a buddy who kept on egging me on. He's like, dude, you got a CPA license. You do nothing with it. And he did this for like years. And I was like, oh man, I should probably do something. And then I was just talking to my wife about it. And then she just was like, oh, we should probably, like come up with like the name, the logo. So she did that. That's the CPA Dude. It's kind of like very much like my personality. Just like you can keep it professional, but you can keep it laid back at the end of the day.
Yeah,
Like, like tax is so complex, you don't need to like have all these fancy terms. It's like, bro, what's the TLDR in layman's terms? Like, that's all that matters. So that's how the brand came up. And yeah, December 19. I was still working at Uber at that time. So this was just like a straight side hustle until April 21 when I went like full time into it.
got it.
Yeah.
Okay.
Mhm.
So were you building a big side clientele on the side, or when did you make that jump from going all in into the CPA dude?
Yeah, yeah. So I built up, so being an accountant, being conservative, right? So yeah, I built up like the clientele like on the side as I went through. So it was like December 19. One like my best friend, he fed me a whole bunch of his clients. So he is like a consultant. He does like end-to-end business consulting. So he fed me a whole bunch of his clients to get me started. And then we just did good work. And then we tried out Yelp and then found some clients that way too, and then just started snowballing once the like I think the biggest part for business is like what holds people back is they never get started. But
Hmm.
once you kind of get started, like the snowball's kind of created as long as you just like show up and try, like it's gonna grow no matter what. Well, fingers crossed, right? So it was able to just grow all organically, and we never went paid ads till just last year. So yeah, we went all straight organic, word of mouth, not much paid advertising. And then I would just say like the biggest part was April 21 was when I decided to quit because this was like the turning point in my life where I was like, wait a second, the math doesn't math. So it was, I think I was making, I can't remember how much I was making. I boiled it down. It was like 400 some dollars a day working at DoorDash. I was like a tax manager there. I didn't like drive DoorDash. So when I tell people I used to work at DoorDash, like, oh, you drove? I'm like, no, I like sat behind a computer and did like
The
taxability
corporate
studies.
stuff.
Yeah. And I think I boiled down to like $400 a day was like my take home pay. But then I was like, wait, I'm working like 12 hours a day for this. I'm like effectively making like 30 bucks an hour. And I was like, wait, this is terrible. And then like during this spree of like January or December and January, I got all these like consultations. So I was like charging 300 an hour back then. And then I was just getting them like left and right. I was like, wait a second, making $300 in 1 hour, or I'm working 12 hours a day, making 30 bucks an hour. I'm like, dude, I could just sit on my butt and like just work 1 hour, talk to someone, actually have fun versus just suffering and being there. Like I'm like very anti W2 now of
Yeah.
a person, but I know it's not for everyone. Like if entrepreneurship was for everyone, that'd be great. But I'm just saying, like, dude, if you do the math, I'm like, holy God, it's terrible. So that's when I tried quitting in like February, March. And then like my director at the time, he's chill. He's like, dude, you can just work 40 hours. And I was like, oh, okay, fine. So then I tried working 40 hours like at DoorDash, but then it wasn't like 40 hours. So that was just like a toxic cycle that kept on
Were
going.
you previously working like 60 hours,
Oh, dude, we're probably working like 87, 70 hours a
70
week
hours a week?
at DoorDash. And then like I was doing the business on at like nights and weekends. So I like had no life. That's like when I like lost both of my hair, like got all these grays and everything. Thank God I had a client though. He sent me like a red light helmet and like Nutrafol, and like it could start growing back. So yeah, it was bad though. I was no sleep, not taking care of my health. I mean, I went to the gym just to go through the motions, but I wasn't like optimized by any means. But I'm glad I made the leap though. But
Mhm.
after making the leap, all right, cool. But yeah, I built it up until like my house was covered, my mortgage was covered, my food was covered, and my Prius was covered. So I was like, all right, basic necessities. And then like my best friend too, he like told me this one thing, was like, you can stay in corporate. And then the one phrase that like kind of just like lit me on fire was like, but it's stagnant money. And I was like, oh, like I hate the word stagnant. I hate the words complacent. Those are why like words just don't jive with me. So I'm just like, oh. So then I was like, oh, I gotta do it. And I asked him like, dude, if all this fails, can you like cover McDonald's per day for me until I
Yep.
figure it out? He's like, I got you. I'm like, all right, cool. So like having someone to like tell you, hey, I got you covered just in case you don't make it. But once you quit, you're like, dude, you're gonna make it. You're just not gonna go broke and like be on the streets, right?
Yeah. Well, I really commend you. I mean, most people, like you said, do not even go and take that first actionable step.
Hmm.
And I think doing the 9 to 5 is important, but the 5 to 9, what you do after work, which is exactly what you were doing the weekends and holidays and having no life, that's what really sets you up to build this side business, which allowed you to then break away from the business or the W2 life later on.
Yeah.
And so I think that's really, really awesome and powerful to do that because, yeah, most people don't even do that.
Yeah, it's tough. Yeah, it's tough. It's just because it's like good cash, right? You show up, you're like, all right, cool, and you check out. You don't care, but since you're living both lives right now, you
Yeah,
like know like you see the pros and cons of both, right?
for
You
sure.
show up, get paid, don't care, get paid, like go home. But
Mhm.
then as an entrepreneur, like if you don't, you have to show up still, no matter what, all the time, and
Yeah.
try to get paid. But there's just so much freedom, flexibility. Like the taste of like freedom, flexibility, you just can't describe it for
Mhm.
me. And I just was that kind of person where like, dude, yeah, like I think I was pretty okay as a corporate worker. Like if you asked me about managers, I think like I definitely gave them like 110%, but
Mhm.
it still wasn't like my thing at the end of the day.
Yeah, it's not your burning passion.
Yeah.
It's kind of how I feel. I mean, and I think what's the worst case scenario? Is this something that you should just think about all the time? So, say you make this jump into entrepreneurship, you give it a year. What's the worst case scenario? You go back to the job you're already doing. Like that's the worst case. I think if you give yourself that perspective, it's not as scary.
Dude, I think that's a really good perspective to put into. I didn't think about that at the time. And then like the more I've learned, like, wait, you just go back.
Yeah,
Like,
like that's literally the worst thing you could do is go back to your old job that you're already doing, that you would already do for the next 20 years. Like
yeah.
I don't know. I mean, I think that's just something I'm really trying to adopt also.
I think it's a good mindset, especially for like medical field, like always gonna be there tomorrow,
Yeah.
right? Like accounting field, always gonna be there tomorrow. Like if you went to school, got a 4-year degree, like 9 times out of 10, your degree is applicable to some job out there. Like there's always some job you can do.
Yeah, exactly. I think the
Hmm.
thing that scares me also is I've built up all this seniority now, so it's just like those golden handcuffs. Like I'm gonna have to go back, start all over after being there for 10 years. But honestly, whatever, I could still do that again. That's not the worst case.
Oh, yeah, yeah. I think that golden handcuffs get to some people, but I'm like, dude, if you had, 2,080 hours to focus on yourself, you can go get so many pairs of golden handcuffs for yourself, though, that you make. It's like the earning potential is like unlimited. And if you
Hmm.
know how to earn it, you can make whatever you want,
Yeah,
really. It's just how much. you want to work and also like how much you know. So like not everyone can just quit the next day and be like, "Oh, I'm gonna become an entrepreneur, make a bunch of money."
Yeah.
It's not gonna work like that, but it's definitely so many resources out there today. You certainly can replace your income. I'm like
Mhm.
a hard believer in that. Like even if you're making half a million, you can make a half a million doing your own business for
Yeah.
sure.
Yeah.
Mhm.
So, can we talk about those early days of the CPA dude? I know you said you got a lot of referrals from your friend. It was super awesome. But what are the struggles that you went through? Were there any times where you're like, you know what, I cannot do this, or I will have to go back? Like, I really want to hear about the nitty gritty,
Oh
hard
yeah.
things.
Oh yeah, dude. It was not all sunshine and rainbows. It's still not today. Like there's always some problem. There's always many problems per day. But some pivotal ones I would say is just when you're doing the late night, like, oh man, it's midnight already. And just like, oh God, like I don't know if there's an end in sight. Like those super late nights really kind of get to you. And it's
Hmm.
just like, oh man, now you're sacrificing sleep, sacrificing health, you're not hitting the gym. Like I'm very big on the health part. You take care of yourself before you take care of anyone else, especially being in like client services. So I think those late nights were a grind. And you just had to push through. There was no choice though. But then the unlock to help that was just to get more people to help. So hiring folks, and then you're like, then you the terrible phrase, I hate it, but it's like misery loves company.
Hmm.
Unfortunately, it's true, but how can you make it a lot better than that? So I think that was tough for sure. There was another like mess up one time. So when I started hiring and I didn't have like the right systems and processes in place, we missed someone's extension. And then there was like 10, 11 grand penalty. It was bad. I tried to get it waived, could not. And I was like, oh, my mistake. So I had to just pay him back. I was like, you got to own up to your mistakes at the end of the day.
Yeah.
So that was like a costly learning lesson, but now it's like having the procedures in place for that. So that sucked too. And then just getting earlier in the days when we had some like, oh, we still have client churn today. It's not like we're perfect. We don't keep everyone, but those conversations, the more difficult ones where like someone just like calls you and just like just like yells crazy. I'm like, like, you just gotta take it and just gotta acknowledge it. Those are super awkward, but it's gotten better since then. But those were definitely some times where like, dang, this thing kind of sucks. And then also was before I figured out pricing models and offers, like I didn't know what I was doing back then. So then you're almost kind of like working almost for free in a sense, but then like you're making a little bit. So that was another thing. Like, oh, okay, this is how you're supposed to price. This is how you're supposed to like have a package and an offer. So that took some grind too. But yeah, no, when I first started, I was like, can I even get a client? I think my first client was like this teacher that I did for 150 bucks. I was like, had no sense of value for my time whatsoever, but it was pretty basic. So, I mean, like, I salute her for like giving trust in me to do her taxes. So it's all, as I always say, it's a two-way street. Like when you're early beginning, you don't know much, charge low, gain value for that person, deliver hella value. And then like as you progress and you're like, oh, okay, cool. You know your stuff now way better. Now you can charge what you're worth.
Got it.
Yeah, yeah. But not all sunshine and rainbows. I think, yeah, yesterday we had to talk about having someone leave the firm. So I'm like, well, that's unfortunate, but kind of just deal with the blows.
Yeah. I think there's just seasons, like how you were saying earlier, that you had those really late nights. And I think it just comes down to seasons. And I think for entrepreneurship, especially when you're getting started, there's a season where you just have to grind completely, and there's no such thing as work life balance. I think you really just have to set yourself up for success, even if that means working really, really late nights for 7 days a week. But if you do that for a couple of years and then you get to the point where you're having all these employees and you have a business that's actually running by itself without you in the business, I think that's the key. And that's something that you really work for. And so
Oh,
that's something that you definitely getting, right?
oh, 100%. Yeah. I think the one part on like work life balance too, I was talking to this about my sister, and work life balance is actually very subjective in hindsight. Is that some people think work life balance is like working 40 hours a week.
Hmm.
And I actually don't think that's true. Like my own personal like definition is just like, as long as the work is still fun, you're happy, then it's cool. Like when I was working 70, 80 hours, it wasn't like miserable because I hated doing it. It just took that many hours. Like the days fly by. It's still fun, but it's just like, oh dang. Like if you actually look at your like calendar, like, oh, huh, guess I did nothing but work. Which is fine. I think as long as your work's enjoyable. But if it's like, dude, you can't wake up and you gotta drag your butt to wherever you gotta work, I think that's when you really have to like have some inflection. Like, I don't think this is right. But if you're, because like when I was working at corporate, be like, oh man, let me just, get in the car, drive like an hour, cross the bridge. All right, come back at like 6, leave at 6. And then because it was like shunned, like you just get weird stares if you like left before 6.
Mm-hmm.
So you stay till 6, and then you're like, oh, what am I gonna do for food? Then you eat in the city. And then it's just like, oh dude, now you're eating garbage, putting garbage in your body. And then you gotta drive back another 40 minutes. I'm like, I think those points were like, dude, this sucks. So yeah, it's not good. But now it's like, oh, hey, now we're lucky. I can come over here, shoot the breeze with you. Now we got 26 people now. So like they're taking care of most of the harder stuff. And I just work on like people development now. So which is fun for me. So I think there's a lot of like payoff. It wasn't easy, but there's a lot of payoffs if you have a end in sight. Mhm.
How many hours now would you say that you're working like on the business?
On the business, it varies. Like tax season was heavy,
Yeah.
but like right now, like I think we're doing what, like 8, 10 hours a day. It's pretty chill. Like I show up at like 9 after the gym, shower, go till 3:30, and then those what 6.5 hours. I think 4 of those are probably spent with my team. So I'm just like building up my team more and more. It's just like how can I train them, develop them, just so they can like go execute, just to leverage my time better. And then the other couple hours are like, doing some client calls and whatnot. And then night times I have to do some client calls or just some emails. So the actual work in itself isn't bad. I used to have like this huge monitor. I still have it. It's like this 40-inch ultra wide. And then it's like this 5K, 2K display. So like I have like 6 screens going. And like I lived and died on that thing. I had a 49-inch before. But like now that I'm not doing the technical work, I literally just work off like literally that same laptop, like the 13-inch laptop. I'm like, all right, cool. So the work has changed, and it's a different, like you said, a different season of work now.
Mhm.
Hmm.
Yeah, awesome. Well, let's get into some specific tax strategies and bring all this value to everyone. So, what's the number one mistake that you see W 2 employees make?
So yeah, that's great question. So not having a tax plan is the biggest one I would say. Is that they think, oh, I'm just W-2. There's not much I can do, which is like to a certain extent true, but you should like really explore the potentials, the what ifs of what you can do. So like having some plans better than no plan. That plan can be as basic as, hey, I'm gonna do a backdoor Roth IRA. Hey, I'm gonna max out my 401k. Gonna get the HSA. Gonna get the FSA, get the commuter benefits, like every pre-tax benefit they should take no matter what, because that's like the few that W-2 people can do. And then beyond that, of like the low-hanging fruit that you could do already, like, all right, buy a home, do your mortgage interest, that could be is like now get into real estate or business. I think that's really the next part. And that's where people get kind of too scared. And I'd say like real estate is really going to move the needle for W-2 people, because a business is actually to create wealth and save some taxes, not as much as like real estate can really put a massive dent. So like doing the short-term rental loophole is just massive, right? So short-term rental loophole, buy an Airbnb, pretty much manage it yourself, no property manager. And if you're just running, a cost segregation study, accelerating all the depreciation, say you buy like $1 million home, what probably pick up three. Well, if 100% bonus depreciation come back to this year, it's what 300K off of your gross income. So if you're working W-2 making 300K, you just bought a house that has 300K, like it's going to net out to zero, and you're literally paying no taxes on the federal side. You'll have some state taxes still, but just not acting is killing W-2 people. Is my I would say.
Yeah. And I think myself included, when I first got started, people just wait until tax season before they start scrambling to do all these different things. And it's a lot more important to your point, be more proactive throughout the year and focus on these different strategies rather than just being reactive at the very end.
Yeah, I always say like, dude, once it's like December 31st, midnight, like the clock strikes, it's like Cinderella turns back in the pumpkin, like done. Like there's not much you can do. There's just a couple of things, but they're not going to move the needle dramatically. So like having like right now, like it's kind of like I joke and say it's like tax planning season. Like there's this tax filing season. Now it's like tax planning season. So it never stops. Which is, still fun and good. But it's just like, hey, right now it's just to have a tax plan. Like just talk to your tax professional, talk to your friends, like, hey, what are you doing to save on taxes? Just because right now you can still act, and there's still like half a year to actually act if you want to buy a house or anything or start a business, you can actually still do it. But even if you're having this conversation in say December, it's going to be pretty tough. November, you still got some Hail Marys, but earlier you start, the better chances you have to save.
Yeah.
Hmm.
A few moments ago, you mentioned the Airbnb short-term rental loophole. Can you expand a little bit more on that? About like what are the specific hours that you need to do? And then you mentioned like cost segregation, depreciation. I know we know what those are, but maybe a lot of listeners don't know what that is. So maybe you could break those things down.
Oh yeah, yeah. So kind of just give me like the 101 like baseline of it, like trying to put it in layman's terms. Hopefully I don't go too crazy technical. Sometimes I'm like, okay, what? But essentially it's just like you buy any house and you're gonna use it as a short-term rental. So you can put on Airbnb, you can put on VRBO, you can have your direct booking site. But the key thing is that you just need a lot of short stays. So the first prong of the short-term rental loophole is you have an average stay of 7 days or less throughout the whole year. So that doesn't mean you can only rent it out like 1 week at a time here. Is that you, as long as your total days divided by your total stays is equal to 7.0 or less, you qualify for the first prong. So you could just like rent it out, have like a midterm rental, like have one person stay for 30 days and then just turn it into weekend stays and get like 22-day stays. So then when we got 40 plus 47 days divided by 21 stays. So we're way under 7. So all you have to do is just have an average stay of 7 days or less. So once you meet that, you're through the first hoop. And the easiest way is why like we said put on Airbnb. It's just like they do have to work for you. So that's going to be your first prong. Then the second prong is material participation. So what that literally means is that you actually worked on the property. So that's like there's 7 different prongs within that one that you can meet, but the easiest ones to meet is 100 hour. You work 100 hours and no one else works more than you. So that means you can have a property manager, but they can't work more than you. And if at that point, from an economic side, you might as well not because they're going to charge you 20%. So yeah, skip that. So you just do everything from doing go do the setup, fly out there, go IKEA, buy all the furniture, set everything up, grab boatload hours, manage all the guest communications, manage your cleaners, make sure your cleaners also put the numbers of hours on their invoices to you because you have to prove out that no one else worked more than you.
Mm,
So 100 hours, no one else works more than you. That's the easiest one to meet. So just do everything yourself, right? That one, long story short.
mm,
The other one is 500 hours. Anyone else can work more than you. But 500 hours, that's a boatload of hours. Like a full time job's 2080, a part time job's 1040, a part time job's 520.
mm.
So like this is like a part time job. And I'm like, ain't no one trying to sign up for that if you're in real estate, unless this thing's like returning 25% cash on cash, then maybe.
Yeah.
So generally 100 hours, no one else works more than you is the best one. And then there's this third one that's super gray, open for interpretation, is you substantially performed all services. So there's no hour requirement. It's just literally saying you did everything. And then the burden of proof, though, is going to be on you that you did everything and you need to document it crazy. So those 3 of the 7 are the easiest to meet. You just need to meet one of them, though. So sometimes people get confused, like, oh, do I need to do a couple of these? Like, just one of the 7 is great. So you just have to meet one of those 3 that I just mentioned. So that's material participation. So hoop number 1, you jump through. Hoop number 2, you've jumped through. Now you actually qualify for the short term rental loophole. And like, why is the short term rental loophole so good? Is because all real estate is defaulted as passive income. Passive income does not offset active income. So, say if you don't hop through all these hoops, all your real estate losses are going to be stuck in a passive bucket. All your W 2 income's active. So, it's like oil and water. The two just don't mix.
Yeah.
So now if you do this, now they become the same, like water and water, oil and oil. They do mix. So you go from passive losses to active losses. Active losses offset active income. How do you get active losses now? Active losses are generated through depreciation. And then for anyone who's like listening doesn't know what depreciation is, it's like the eighth world wonder. So it's something you can't see, touch, or feel. But this is how the rich get richer. Like if you're not using depreciation, you're legit missing out on it, right? Like you saw my car. I use depreciation to offset my taxes, right? Just so what this is you're just front loading a crap load of your expenses in the first year. And you get this even if you don't pay for it. That's why depreciation is so cool. $1 million home. So you just put 10% down, right? It's your second home. You're 100K out of pocket. But with depreciation, because you took the loan out and how the tax code works, is that you can take the full benefit of $1 million. So now you have $1 million asset and then using a cost segregation study, essentially a super expensive study, to tell you, hey, this house, the components like the windows, the doors, the cabinets, the useful life is smaller.
Mm.
So the IRS, when you buy a property, they say the whole thing is 27 and a half years or 39 years. But we sure know that cabinets and carpet do not last that long. So the cost segregation study, what it does is say, hey, you have $20,000 in 5-year property, $100,000 in 7-year property, you got $500,000 in 15-year property. Because you have these three different buckets, now on your tax return, you can light those all on fire, take it all in the first year to offset all your income. So, because bonus depreciation is only applicable to property that's 20 years or less in useful life. So, you need a cost segregation study, which breaks all the components, which then allows you to take accelerated depreciation. Accelerated depreciation, long story short, is that you're just taking more of the depreciation faster. So, like I said, everything's defaulted to 39 years. Now you got some 5 year, 7, 15-year property. And then finally, bonus depreciation is the gas on fire. So you light it all on fire, you're able to take as much as you can the first year. So that's why depreciation is so useful and how you're able to offset all the income is that you can get a $300,000 tax benefit for only putting $100,000 out of your pocket. There's nothing else in the tax code that does that. So that's why the short-term rental loophole is so powerful for W-2 people because it's one of the few strategies they can still do while maintaining a full-time job.
Got it. Okay. So
Mhm.
many questions I have there.
Oh, yeah, yeah.
So I know you said it could offset your active income, say like a W-2. Do people, they can essentially get back a bunch of money instead of, or does it just make it so they don't have to pay any taxes?
Mix of both.
Yeah.
So generally speaking, most W-2 people, they already have income taxes withheld from their paycheck every pay period. So say if you had the normal, you didn't change anything at all, and then they withheld income on like $300,000 and you picked up a $300,000 loss, then you get all the money back that was withheld from you. So that's like you're gonna get a big fat refund that year. Yeah. Or you can like hack it and like turn off all your withholdings. So then you'll have more cash in your pocket today, but then your refund will be less. But time value of money is you always take the money today. So yeah.
Second question was, how do you document all those different things for the short-term rental loophole? How have you seen people do that? Is it just having a Google sheet, say this day I did this? Like, what's the best way to actually like prove you did all that stuff?
Yeah, so there's multiple ways to track it. There's Google Sheets that you can do. There's softwares like Clockify that you can use, Reps Tracker that you can use. So whatever documentation, some people use pen and paper. I'm like, wow, it's 2025. So you can use any style to document it, but the IRS is always looking for your logs. So as long as you have a log, you're gonna be good. So you have the date, the time. The time I always say like do it like attorney style. Like your attorney's gonna bill you every 6 minutes. Do the same. Like you don't really want to round up to like hour or like half hour. Like it's better to go like to the point one. So drill down as much as you can. And then like who did you talk to? What did you do? What activity did you do? So then you're gonna have the full audit log. So it's kind of like your timesheet at work. Like, hey, what did you actually do during these 8 hours? And you like write it all down. So that's the first thing they're going to poke at when you get audited.
Got it. Okay. Last thing is for the depreciation. I just want to clarify. So it's not like you're not paying the taxes, you're just postponing it to later, right?
Hmm. Hmm.
Because that's an important thing that I think a lot of people miss is that, say, when you sell that asset, then now you owe all those taxes, right?
Oh, it's brutal. Yes, you owe huge. Yeah. Hmm. Yeah. So you're taking the benefit today because a dollar today is stronger than a dollar tomorrow.
Mm-hmm.
But when you do go sell that property, you have to pay back the benefit then. But generally speaking, that's when you implement like a 1031 exchange or you just hold it forever. And then, if someone like you hold it and then you pass it off to your heirs, then you get the step up in basis and it wipes away all that depreciation. So you need some planning on the back end because you're front loading taking all the benefit today. So I always say that you're just robbing Peter to pay Paul.
Mm-hmm. Got it. Okay. Yeah, it's very, very complex. How much does it cost to do this cost segregation study? Is it dependent on the size and uh, like cost of the asset, or like is it just like a base thing that pretty much everyone pays?
Yeah, it varies a ton. So there's definitely there's a ton of like AI companies coming out with it, but I wouldn't use those studies on that side, just more so because they're not detailed enough and they probably get like not thrown out, but like probably blown up during audit. So there's a couple of vendors that we use. There's like a cheaper vendor that we use. They're computer generated studies. So what they do is like they'll take this home compared to others around the area and use ratios to apply against that. And those are like 700 to $1,000, like pretty cheap
Yeah,
actually.
it's not bad.
Yep. And then there's like the full blown studies. Those are crazy expensive. Like I think anywhere starting rate is like 2,000. They do have an audit protection though, which is nice. So if you get blown up under audit, they'll defend you. But 2,000 starting rate probably averages more out to 3,000. I've seen up to like 5,000 before on like a single family home. So it varies on the company and what they do. But I always say they're free quotes. Just go get three and go compare, go get two and go compare. Cause there's this one time we actually got two quotes, one from a expensive vendor, one from a cheaper vendor. And then the more expensive vendor study actually had way more depreciation. And then even their fee was an extra $2,500 or $2,000. The tax savings of that was still plus another 4 or 5 grand. So like it's not always like, hey, this one's $700, this one's 3,000. You can't make your decision off that. The devil's in the details with taxes. So what you have to do is take your estimated benefit, multiply by your tax rate, then you'll see true net tax savings. So yeah, at face value, I'm like, of course I'll buy $700. Why would I pay like 3K?
Yeah.
But it's like, dude, that's actually gonna bite you in hindsight. It's kind of like I always joke around. It's like, yo, if you go pay someone at H&R Block $300, I'm not anyone at H&R Block. Also, we don't hate you. It's just you just happen to have so much branding we see at every corner. Is like, hey, you paid them $300. They may have screwed you over for like 30,000, right? You kind of get what you pay for in life. I was gonna
sure.
actually make some post about that, about you get what you pay for, because there was the last time where you got a deal or a steal on anything, and it was amazing. So yeah, there was one actually recently, so I mean 3 weeks ago. It was an H&R Block prepared return. It was still $1,300. And they had like a few rentals and everything. Like I get it, it's a pretty decent price, but on their stocks, they completely missed the basis on the stock. So this person sold stocks, then so they sold for $121,000. And stocks aren't free, right? You have to pay something to get the stock. So then on that tax return, though, it said they paid zero for the stock. So they picked up the whole entire gain, which I know is fake, right? Like you paid something for the stock, even if you like held it back in the day for 2 pennies. I mean, your basis would still be like, round up to $1 at least. So like that's what like a material error. I'm like, yo, dude, this thing probably cost you a boatload of money. So that's kind of like the thing. Just like evaluate who you're using. Yeah.
So when is it appropriate to use it, and who do you think should use it? Like, should it just be people who own investment properties? Should it be people who own primary residences? Who should be doing it?
Oh yeah. So when to use it? So it's always like a lot of tax planning items. They're always like tools in the toolbox, is what I always tell people. So it's like a good tool, and like when do you actually pull it out? There's like a few use cases. There's like one, you have the Airbnb. You're gonna do the short-term rental loophole. That's gonna be worth it because I mean we're talking about paying 1 to 3K for one of these things. So you gotta get your ROI.
Mm-hmm.
Number two would be like if you're real estate professional status. So generally speaking, that's like that next unicorn status to get. And then three is more like it depends is like always like the joke answer in taxes. But if your property is super profitable after straight line depreciation, so generally where I see this is actually like midterm rentals, where the amount of rent they're getting actually outpaces like interest, insurance, depreciation, and taxes. And I'm like, oh wait, the thing's still profitable. Then using a cost seg would be great. Those are the three times when I say it. Actually, it's actually how I met like one of my good friends. So he was doing his taxes. But he was a dude that was just like engaged us. I was like, all right, man, I'll just do your taxes. And then I looked at his I did the whole return. I'm like, something's wrong. So I hit him up. I was like, why is it? Because it was wrong to me because it's profitable. 9 times out of 10 on taxes, you should look broke on taxes for real estate. So when you're positive, that kind of raises like your eyebrow. I'm like, what are you doing? So I hit this dude up. I'm like, hey, I think your income statement's wrong, dude. He's like, what do you mean? I'm like, I think you're missing some expenses. And he's like, no, that's right. I'm like, what do you do? Like, what are in these houses? And then that's when he told me he was doing midterm rentals, pad splits, rent by the room. And I was like, oh,
Super profitable.
super profitable.
Yeah.
Yeah. So then he had those, and they were just going because it was like rent by the room, $800, like what, $800 a month on one room on an 8-bedroom house. $6,400 on like a $300,000 home in Atlanta. So I'm like, oh, but then I asked him about that and I'm like, tell me more. And then I got suckered into it and then I started investing in the pad splits. But it wasn't all sunshine and rainbows like all real estate is. But it was like having that conversation again was like, wait, what's wrong with these? I'm like, they're so profitable. So then we ran a cost seg for him, even though he was not real estate professional status or short-term rental loophole.
Got it. Okay. So his didn't go down to zero. It just lowered his significantly, but he was still positive.
He on like, yeah, in his bank, he was positive. On paper, he paid no taxes that year.
Nice.
Yeah, because of the cost seg. So yeah, it's always for investment properties. So yeah, you never need to run it on your primary home, just because even if you have a primary home and you have a home office, like generally speaking, that should still net out negative for you. So if it still comes out positive, use scenario 3 that we're talking about here and just run a cost seg on it.
Okay.
Yeah,
Awesome.
or you house hack maybe too.
Okay.
Yeah,
Good to know.
Yep.
One thing I want to talk about that you mentioned just right now also is real estate professional status. That's another great tax saving strategy. Can you talk about that, what that is?
Oh, yeah. So this is like the classic like doctor and stay-at-home spouse partner. And you usually need 2 people, like a married couple to do this. Like it doesn't really work with a single person. So what it is like it's the unicorn of like tax status. This is what I tell people. And the first part is you have to work 750 hours or more in the trades or businesses of real estate. And there's like 12 trades or businesses of real estate. So being like an influencer isn't one, like a real estate influencer isn't one. Like the main ones are like brokering, being a real estate agent, developing, redeveloping, operations, property management. Those are your general big ones. So you have 750 hours into that. Then over 50% of your time has to be dedicated towards the trades or businesses of real estate. So that's where you can't really have a full-time job and do this. You can possibly have a part-time job and make it happen still. So as long as over 50% of your time is dedicated towards real estate. So that's hoop 1, hoop 2. And then the key part is like some people have argued with me. I'm like, I can't do this when I'm full-time. I'm like, I don't know, man. Like let's just talk about it. It's like 2,080 hours full-time job. 2,000. So you need over 50%. So you need 2,081 hours. I'm like, I signed up for a couple of years of not having a life. I own a business. I don't think I work 4,000 hours a year.
Yeah.
Like working 4,000 hours a year is wild. So if they do it, legit by definition, they would make it. But if not, it's not going to happen. So hop through 1, 2, and then 3, just like the short-term rental loophole that we talked about earlier, where you have to have material participation. It's the same 7 prongs again. So 100 hours, no one else works more than you. You substantially performed all services, or you do 500 hours and you can have a property manager if you make the special grouping election. So a lot of our real estate professional status folks, it's like the doctor stay-at-home partner, or like it's the software engineer, the stay-at-home partner, since we're in the Bay. It's a classic combo. Like someone's making bank, the other person's investing all the bank into somewhere else. Is that you would take those 2, marry it together, and they can have a property manager so they don't have to do all the work. And what the grouping election lets you do is say you have like 10 properties, you group them all together, and that 500 hours only has to be tested against that whole group, not just one. So material participation is actually a like per property test. So you'd have to do 500 hours on each 10 properties, which is impossible, right? That's why they made the grouping election where if you have 10 properties and you have a property manager, but you still do 500 hours of work, you can use the grouping and still qualify. So you got 3 hoops to jump through in order to meet it for real estate professional status. But this is like the classic of like, cool, doctor makes $500,000. All right, cool, let's take half of that, $200,000 down. All right, cool, go buy $1 million property. All right, bring up $300,000-$400,000 of depreciation, pay taxes on like $100,000 to $200,000, save what, 40, 50 grand, recycle that into next year. It's really why the rich get richer. Like if you know how to use the tax code, like it's literally kind of unfair, I would say, where I'm like, damn, like the phrase is real. Like seriously, if you knew, you're just shifting how you're doing your taxes a little bit. And next thing you know, you got an extra 50 grand back in your pocket.
That's crazy.
Yeah.
Has all this stuff been around forever, or just like, is it new? Like how does like so many people, middle class, lower class, whatever, don't know what this is, and only the rich know about this stuff?
Yeah. So I would say 80% of the stuff that we're talking about today has been around forever. Like the short-term rental loophole, it's actually been around since 1986 tax reform. It just didn't get popular because you didn't. So short-term rental loophole is actually made for bed and breakfasts back in the day.
Mm.
And it was because, hey, you have a piece of real estate, you're operating a business out of it, like serving folks, like actually like cleaning, whatnot. So, but there's no medium like Airbnb to enable people to do it. So these tax strategies have been around. Real estate professional status has been around for a long time. Cost segs, accelerated depreciation, they're all there. But it's actually tax literacy is just like how there's horrendous financial literacy in our system. There's like zero tax literacy
Mm.
whatsoever. So those two areas there is just not there. And then like my own conspiracy theory though is that they don't teach you tax or financial literacy. So you stay in the system
Mhm.
to work W-2 because when you're W-2, the government's guaranteed their 15.3%. So that's your Social Security and Medicare, 7.65 from you,
Mhm.
7.65 from your employer. So they're guaranteed the 15.3%. So like that's my own conspiracy theory of like they don't want you to be an entrepreneur and not pay any Social Security taxes,
Yeah.
Medicare taxes, because how are they going to fund those programs?
Yeah.
So versus like an entrepreneur, like, cool, if I made $100,000, let me just go buy a G Wagon for $100,000. Terrible idea, but it's like, oh, you're negative, wait, because the G Wagon is like 200 grand. So you're negative 100 grand.
Mhm.
You pay zero in taxes. Now the government's like, how am I going to pay for Social Security benefits and Medicare benefits? So that's my conspiracy theory.
No, I mean, I agree. It's pretty crazy. Like, even just thinking about the schooling system and how it started during the Industrial Revolution, and how I think schools nowadays just try and keep everyone to go into the W-2 jobs. I don't know. It's just very contrarian and weird to think about.
Yeah. So yeah, it's the same thing with taxes too. It's just like, hey, these things only came out of the war, right?
Mhm.
And then they just stayed.
Mhm.
Yeah.
Interesting. So one thing I want to talk about also is, like, how can W-2 employees with side hustles, like, when do you think they should start an LLC? Like, say they just started a side hustle right now. Do you think they should wait for later till they're making much more money, or should they start an LLC right away?
Yeah. So this one's like a good old, it depends on, probably we could answer every question you have
Okay.
as it depends.
Okay.
But the big thing part, I would say if you're have some appetite of risk and you're in California, skip the LLC just because if you have an LLC, it's going to cost you $800 every year to maintain.
Mm-hmm.
So even if you do nothing with the LLC, you just formed it, you're going to have to pay $800 every year to maintain it.
Mm-hmm.
And then you have to have an extra tax filing in California for it. So I would say just pass on it. Any other state though in the US, you just form it and it's not, you're going to pay what, a few $100 to do it. That's totally fine.
Mm-hmm.
But then you just have the administrative burden, books, business bank account, business credit card, reconciling the books. So it's a little bit of a headache. But the like definitive, like if you are in California and you have $50,000 net income, getting an LLC and then electing it to be an S corporation is like money, just because you're going to save all that Social Security and Medicare taxes. So I'd say $50,000 net income if you're in California. Anywhere else outside of the U.S. or outside of California, sorry, is you can just get it and pay the fees. That's fine.
Okay. And what about C Corp, S Corp? All that's a little confusing to me, to be honest. So
Yeah.
when should people elect to do one versus the other?
Oh yeah, yeah. So yeah, you have LLCs. They're like chameleons. Like you can elect the LLC to be taxed as a C corp, an S corp, or an LLC. So it's like, oh, it's like a ditto. Like which one is it going to turn into? Or what's the other one? Eevee,
Yeah.
right? Where you turn into the Flareon.
Pokemon. These are
Jolteon.
Pokemon.
Yeah, and Vaporeon, right? You can pick which one it turns into. Is based off the facts and circumstances of your situation. So S corps, unfortunately, if you're not a U.S. citizen and resident, you can't be an S corp. So you have to be a C corp. So you just go C corp route. C corps also, if you're making $700,000 net income, you're actually going to save more money than if you're an S corp or an LLC. The reason why is because S corps are only taxed at 21%. At $700,000 net income, you're taxed at 37%. So you have like a 16% delta that you can hack it with. But all that extra headache is like needed too, because like C corps are super complicated.
Mm-hmm.
So that's when you do C corp is like $700,000 net income. If not, just and like you're a U.S. resident. All right, let's not talk about C corps. That's like a way down the road strategy. C corps also, if you have a boatload of properties, a lot of people form property management companies through those to wash away money too. So C corps, there's like a time and place for them, but they're just kind of complicated. It's the double taxed entity also. So a lot of people they don't like it because the only way to get money out is pay yourself W-2, tax once. All right, get a dividend, taxed again, and the company pays taxes too, the C corps. Unlike S corps and LLCs, the companies don't pay taxes. So S corps, if you're a U.S. resident, make $50,000 net income, I would say like check. You can almost like if then statement this And then LLCs is like under $50,000, but you want legal protection. Yeah. So that's kind of like the order of operations, like how I would go about it. Like 95% of our, or 90, rather 98% of our clients that are in the business space, we push them all into S Corps. Mm-hmm.
What about your approach? I mean, this is just so fascinating to me because it's all foreign to me, honestly, all these different entity structuring and all that stuff. What about just like having holding companies, or when should families start to think about trusts or things like that, like as far as like building wealth and all that preservation?
Oh yeah, yeah, yeah. I definitely would hit up like a like a wealth attorney or like a estate planner, estate attorney. I think they always have different answers than me, but like from what I see from our clients and like my own personal view is like you should have a trust as once you own a house. Just because like probate in California is like minimum 20 grand. So
Yeah, for sure.
get a trust just because I mean, yes, it's gonna cost I don't know 5, 6, 7, 8,000, whatever. But minimum probate's 20 grand, and they just go based off your value of your assets.
Mm-hmm.
So get a trust no matter what. And then in terms of like holding companies and separate LLCs, because you've seen some like crazy extravagant ones where you got the holding company and then you got like these 5 other ones and 5 other ones down here. So you got multi-tier. That one is like, how much do you want to hide behind your LLCs and like to like further reduce lawsuits, I would say. So if you want a really complex structure to hide behind just in case you get sued, it's actually probably great to do that. But for tax wise, all LLCs are pass through entities, which simply mean that we got LLC tier 1 that's owned by LLC tier 2, and this LLC tier is owned by the holding company LLC, and then you're up top. They all go back to you. So there's no tax savings for all the LLCs and the holding part. So the whole structuring part is actually just to protect your assets. The times where structuring comes into place for tax planning, though, is when you have a C Corp or an S Corp. A C Corp is its own standalone entity and pays its own taxes. An S Corp is a filter for Social Security and Medicare taxes. So, for example, like we're just talking about real estate, like once you're kind of a little bit more elevated, a strategy you can use is you have you got the trust, you got the holding company, and you have like 2 or 3 LLCs on the bottom, right? So you're protected a little bit more. But then, so that does nothing to save you on taxes. How you do save money on taxes, now you add a C Corp on the other side. The C Corp is your property management company. So all your bottom tier LLCs pay the management company whatever fee it is, 10%, whatnot. So then they pick up an expense or here, because usually if you can afford this many properties, you're pretty rich. You're at 37%. Like, so it's like you're at 37%. So now you don't want to get taxed at 37%. So move it over into the entity that's 21%, and then run all your expenses through that. So you put a lot, Augusta Rule, income shifting, 401ks, just hide it all in there. And then you barely pay anything. So that's more of like an advanced structure that you can do, but it's like reserved for less people. I see a lot of bad stuff out there where people are like selling like these crazy like estate plans or like entity structuring. I'm like, dude, do you know how much maintenance is going to cost you? Like even registered agent fees are like $30 a year. You set up 10 of those, you got $300 just in registered agent fees, and you're not doing like squat with these things. I'm like, like, I don't know. I just like to keep it simple and like save money. Like inner agent, I'm like, yo, your money's is my money. So I'm like, I wouldn't pay that much for registered agent fees. I don't want you to. So that's me. I'm pretty basic, like of like how we structure our entities.
Well, it's good. I mean, I think a lot of people try and get people to do those very complex things. I think doing what you're doing, just keeping it simple, is the best way to go about it.
Yeah. Until I get to like that crazy, like, hey, I got like an 8-figure portfolio of like real estate. I don't probably need anything. This is like, all right, couple entities, nice insurance plan, umbrella. I'm cool.
Yeah. What's the Augusta Rule? Because I know you mentioned that. I know that's another tax strategy.
Oh yeah.
Can you talk about that?
Oh, the Augusta's like free money. So the Augusta Rule, it's great. So it's primarily used for businesses. You can do it for some real estate, but usually you want to have some small business of some sort. And this is essentially tax-free income. So what it is, it's actually made out of the golf tournament, the Augusta tournament. So where you can rent out your personal residence to your company 14 times a year, tax-free. So let's just say like, hey, we're hosting a podcasting event today. Your company can rent it out, or you yourself can rent out to your company, charge whatever market rate is. So you just look up like, hey, what's fair market value per hour for a podcast studio around here? Oh, it's $100. Oh, hey, we're here for 8 hours, $800. So you can take $800, charge that over. You're going to pick it up personally and it's all tax free. And then the company gets an $800 write off. Do this 14 times. We just created, 10K plus in, I wouldn't say imaginary write offs, but a non cash expense. All we did was literally move 10 grand from the business account to the personal account. But we just say you're at 30% tax rate as an example. You just save $3,000 just by using the tax code the right way. Like, once again, it's in there, just no one uses it the right way. So you just have to document. That's the sunshine and rainbows you probably hear about on socials. But like the behind the scenes, the not so good part about it is you actually have to have like a real lease, real contract. Like if you're going to go rent someone's place, you're signing a contract, right? 2, you actually have to move the money. You have to pay the person for it. So there has to be a real use, right? It's not like you wouldn't go pay someone randomly $800 so you do nothing. Like you have a real use of it. So the documentation is where people get burned on. Mm-hmm.
Yeah, that's very, very complex. And definitely having a very well-versed tax strategist like yourself would be huge and very important in this situation.
Yeah.
What are some tools or things that people could use to track their expenses? I grew up, my family was like, save all your receipts and that's it. And tax season, just kind of go through everything. Kind of crazy. What's your favorite softwares or tools that you think people should use to track everything?
Yeah, the shoebox method isn't too bad. Yeah. The only bad thing about the shoebox method is those thermal receipts, they actually wear out over time. So I'm not sure if you have you ever looked at some thermal receipts from it's faded, it's gone. So shoebox, not bad. But now with 2025 technology, I'm just like pretty basic on QuickBooks Online. So it's just like everyone knows how to use that software. So like even if you have a company that helps you out, like our firm does bookkeeping, we always like mostly force our clients on the QuickBooks Online. But if you want to like go through the headache and manage a VA, a bookkeeper offshore to do it, they're trained in QuickBooks Online. So like it's almost become like an industry term, which is kind of unfortunate because Intuit almost has like a monopoly. So that's like the primary tool. Xero XERO, that's another tool that's pretty good too. It's like a good competitor. Pricing is very similar. And then Wave Apps used to be okay, but going back to our non-sponsored person, H&R Block today, they bought out Wave Apps and started nickel and diming. So before Wave Apps was like 100% free, all the bells and whistles. Then H&R Block bought them out. Now you can't invite your accountant towards it. You can't link up a bank account like you can in QuickBooks. They charge you for that now. They'll let you import your file, like your CSV, but so I don't really recommend Wave Apps anymore. I'm like, just QuickBooks Online, just bite the bullet and call it a day.
I use QuickBooks. It's a little confusing at first to try and figure out, to be honest, but I think YouTube has everything and QuickBooks also has everything online as far as like how to use it.
Oh yeah, that's a good call. Like YouTube, like even if you want to DIY your own book still, yeah, YouTube, there's so many guides on that compared to other softwares.
Mm-hmm. Okay. So say I'm a brand new client. What's the first, what are the processes look like onboarding a new client, trying to figure out how to find the best tax strategies to go about?
Oh yeah, for sure. So yeah, generally when we onboard new clients, like first we'll have our discovery call, make sure like it's actually gonna be a good fit. Otherwise, we're like, hey, cut it to them straight. I'm like, I probably can't help you. Like just to like maintain like brand. So sometimes like, hey, they want to work with us, and we're like, hey, it's gonna look like this. We're not gonna see much ROI until later. So like once they're like past that and past like the application process, then they come on. Then generally during that discovery call, we actually like probe a ton of questions like, what are your goals? What do you want to accomplish? What are your income sources? Like, are they W-2, 1099? How much do you make? And then, so between those 3 things, that's usually how we craft up the plan. So you like deal me like, 6, 7, 8 cars. I'm like, oh, okay. Let me go back to the drawing board, craft up a tax plan, then we deliver that to you. But it's really understanding like, hey, what do you plan on doing this year? What do you plan on doing in 5 years? How much money do you want to make? It's always an awkward question. There was like some report I read that talking about sex is more like comfortable than talking about money. Like it's really weird. Like I don't know what happened to our culture about talking about money. So even when I ask our clients like how much money you want to make, they're like, I don't know. I'm like, what do you mean you don't want to know?
Yeah,
I love money. I'll talk about it all
Same,
day.
me too.
Yeah, exactly. I got the green shirt on, dude. Like
I always stay on brand.
Exactly. So like just have the conversation and they're like, oh, good question. I'm like, how much does your partner make? I don't know. What do you mean? You're married. I'm like, I don't know what's going on behind the scenes here, but like these are the conversations that need to be had because like, oh, if you're at 300,000 versus a million versus 3 million, the tax planning conversation is very different. So we understand like what our clients' goals are and like how much they want to make and also holding them accountable towards that side. And then that's how we'll craft up the plan. But they're kind of like in three general buckets. The three general buckets, how I explain it is that you're either in real estate, business, or charity. And so that's how the tax code's written.
Mm-hmm.
And it's if you're in real estate, there's all the sub things that you can do. Like you can do flips, right? You can do LTRs, STRs, from a tax side.
Mm-hmm.
And then within business, there's so much you can do. You got the S Corps, C Corps. You can do whatever business you want, right?
Mm-hmm.
A rental, like we always set up a lot of like RV, like Turo rentals just because of the depreciation. You can do a laundromat. You can start up a tax business or whatever you call it.
Mm-hmm.
So you can do so many deductions that way. And then the last like umbrella I say is like the charity part. The charity, there's a dark side to that. Like the NFL is no longer a nonprofit, or is it a nonprofit still?
I'm not sure.
Yeah. I can't remember. I saw some report. I think it was, but it may have changed. But like nonprofits, foundations, the Bill and Melinda Gates foundations, leveraged charitable donations. That's actually a pretty big W-2 strategy that you can use. Hyper aggressive, not recommended, but if you hate taxes, you may want to consider it. I always use that as an example of like, hey, you got a Charizard like card when you're like 5 years old and you kept it protected.
Yep.
And then you get it like appraised for $1 million and you donate that to a museum,
Mm-hmm.
you get $1 million deduction.
Hmm.
So there's like controlled transactions out there using like land, hearing aids, trees. I've seen it a whole bunch where you kind of control the transaction. So those are the three big buckets you got to play in.
Mm-hmm.
So if you're not playing one of those, you're like losing the game. But I would say like we try to pick 1, 2, 3 of those buckets. We'll present it to our clients of like that's applicable to them, and then just let them choose.
Mm-hmm.
If they don't know, I'm like, all right, man, we'll just do this.
Yeah.
Because it's confusing stuff. Like even if I present the whole menu, like, when you go eat at like a Chinese restaurant, and you're like, 50, 55 items. I'm like, I don't know what to get, man. Like,
And I can't even read it. It's in Chinese.
yeah. I'm just like, I don't know. I'm like, just give me the good stuff, right?
Yeah.
Mm-hmm.
Interesting. How many of your clients would you say, like, say they're two high W-2 earner incomes, actually go onto this, like, become a real estate professional status or do this other things?
I'd say it's tough. I'd say it would probably maybe only 20% actually take the advice that we tell them to do. Like I'm like, oh geez, that was quite the investment. I mean, it's investment in education
Mm-hmm.
for us, but it's hard just to take good action. I think there's still a little bit of fear from leaving the W-2. It's so cush and comfortable to going real estate professional status because it's going to take years to acquire that many properties.
For sure.
Or the short-term rental loophole. Like I was talking to a friend, she literally messaged me like, I've been telling my husband about this for 2 years, but he doesn't want to do it. I'm like, dude, just ask for forgiveness. Just go buy the house and then be like, hey, I bought an Airbnb. Because it's not just the tax savings, like the tax savings, like as much as what we do is like very important,
Mm-hmm.
I would say it's just the cherry on top.
Mhm.
The big part that we're talking about is the wealth building though.
Mhm.
It's like, hey, buy property, have great equity, take the equity out. It's tax-free income.
Mhm.
Go buy more, make more with it. It's the wealth building, also passive income too.
Mm-hmm.
And that's the key part of it. It just happens to be like tax melts perfectly with wealth building strategies.
Mm.
Yeah.
Yeah, that's gold. So W-2 or 1099, which one has more tax savings opportunity? Hands down, 1099.
Yeah. Actually, that's another one of our strategies is like, I sometimes just ask them like, can your employer switch you from W-2 to 1099? And then like, dude, we can like make it rain all day. Like literally if we do that, it's probably like $30,000 saved instantly on a 6-figure income.
Damn.
Because you can just do so much. Like you can do the Augusta Rule. Hey, next thing you know, you got $12,000 expense. You can control your solo 401k. So like, like right now, do you get a match from like, how much do they match you?
I think mine's like 6%.
6%. So
Yeah.
that's 6%. So then when you're your own employer, you can match yourself 25%.
What?
Yeah. So, and you get a deduction for that. So it's like, cool. Now you pair in that one. Then you pair in just like the normal day-to-day expenses. Like, yes, you got internet you got to pay for. You got your cell phone you got to pay for. You got your electronics, computer, mics, right?
Yep.
All that you got to pay for. That's just using your normal life. And then if you have a kid, you can pay the kid to help out doing some basic stuff. Age 7 or above is recommended. But you make that one switch, you're about to find like $30,000 in savings. Yeah, 1099 is where it's at. So like if you're a W-2, if you can be 1099, like try to run it. Never hurts to ask.
Yeah.
Yeah.
I don't think I can. As a nurse, I don't think I can.
Oh, nurse. Yeah. Unless you're going to even travel nurses, I saw that they're forcing the companies that have travel nurses, they force them in the W-2. I think because of, I forgot. is the AB5 law that came out like years ago, 2018, 19, that like essentially it defined all independent contractors as like W-2 workers unless you're specifically like excluded from that group.
Hmm.
Yeah. The only ones that I've seen on the medical side that were able to do it were doctors. There's some doctors that can go 1099. I forgot what's called. Locums? Yeah, yeah. So those doctors can go 1099 and then their own business and save a boatload of money.
Hmm. I wonder about like if you're doing like some kind of like med spa.
Oh, med spa. Oh, yeah. If you can just come in as 1099, that'd be sweet. Yeah, but 1099 is the way to go. It's a lot of headache though. So like, unfortunately, that's like when you kind of need like tax advice. But just the savings alone, like compounded over the years, makes a big difference. Like if you take 30 grand, compound over that over 20 years at what, 8% rate, like that's a crap load of money that you could have saved versus paying it into taxes each year.
Yeah, for sure. Can you talk about how businesses can really do tax deductions and business expenses correctly? Because I think there's a lot of misconceptions about how to do things properly when it comes to writing things off.
Oh yeah, yeah. This is a super gray space for sure. Like we don't know like, hey, is this a deduction or that's not a deduction? And it's very gray because the definition is very gray. So the definition of like business expenses is number one, is it ordinary? Number two, is it necessary for your trade or business to like generate income? So if you can meet those two prongs, then it's gonna qualify. But if it can't, then it won't qualify. So like let's just say, for example, like, hey, is it ordinary and necessary for me to take a flight over to say, I don't know, Austin, Texas to go speak for something? Yes, right? But is it ordinary and necessary for me to take a private jet to go to Austin, right? It's not necessary, right? Like, so that's where you fail on that same example. So it's like, and then it is ordinary for like someone to travel to speak, right? Any business, right? Has that, but it's just like a private jet or chartering a semi-private jet, probably not as much. Also, they're trying to scrutinize private jets more now. So that's where the ordinary necessary part comes into play. The other part, was it two areas where the IRS likes to poke holes at and like deflate you instantly. I have an IRS tax auditor on my team. So like he got shared like the inside scoop. So they love poking at car and car deductions. So if you don't have a travel log, like a mileage log for your car, they'll try to disallow that to get free money right away. And then the second one, what they'll poke holes at is your meals. So if you're going out to eat, it's only 50%, but it's better than nothing. But write down like who were you with, and like what were we talking about? What was the business purpose? Yeah, so it's always like the who, what, when, where, why, but the when, where is on the receipt. So you don't need to write it down, but that, and then take a picture of the receipt. I like to take pictures or just like stash into my little baggie and then take it all on Sunday and then put it into a Google Drive folder. So that's like expense wise, like ordinary, necessary, and like where you're going to document it. And then, oh, the third one was travel. They like to poke at travel. So you need a full itinerary. Like, where were you going? Why were you going? Who did you meet? What does the itinerary look like? Versus like, I'm going to Vegas. I'm just going to write some of this off. What did you do though? So those are the three areas where the IRS likes to just poke at it because it's like instant free money for them.
Does it have to be, so say I go on a trip to Cancun and it's like a mastermind or something like that for 7 days. And say each day we're only doing mastermind things for like 2 hours a day. Would the write-off, I guess, only be able to do for those 14 hours for that entire week? Or would you still be able to do that entire 7 days? Does that make sense?
Yeah, yeah. So yeah, it's like how aggressive you want to get with it. If you want to be like super like on the risk adverse side, you can prorate it. But if you want to be a little bit more on the aggressive side, just like toss the whole thing. So I would do at least the 100% wise, the travel for there and the hotel for sure, 100%. And then the conference itself is 100%. Now the tricky part is like the meals and the stuff you did afterwards, like which ones are attributable towards the conference, which ones were not. That's where it gets tricky. But like the big things are like the flight, the hotel, the conference part. Just write all that off for sure.
Got it. Yeah, that's super important.
Yeah.
And trying to figure out how to document everything, I think, is even the crazier part. So you take pictures of everything, put it on a Google Drive, and then keep track of everything like on Google Sheets as far as like meeting agendas, all the different stuff.
Yeah, for travel, yeah. Like, what's your itinerary for going? Like, what's the purpose? Like, why did you go? Yeah, and then food is always like on the receipt. Who you're with? Why did you guys meet? And then cars. I just use Mile IQ for tracking mileage. QuickBooks Online, I believe, has a mileage tracker too. Yeah, so it's like built in, so you don't have to use Mile IQ.
Interesting.
Yeah.
Okay.
hmm
So you know all these different tax strategies. What are some things that you do and implement in your own life?
Oh yeah. So man, it's been over the years. The most fun one was the Tesla. So yeah, that was it. I think when the business actually like gained traction, I was like, oh wow, that was like a nice year. So then I was like, ended up just, and then another part was like my buddy's friend's husband was 29, unfortunately passed in a car accident. And I was like, dang, I was like, dude, the one thing before I die, I was like, I always wanted like a nicer car because like watching the Fast and Furious growing up, like always wanted a car. So I bought the Model X and it was a 6,000 pound car. So then I was able to bonus depreciate that in 22 or 23.
Mhm.
So I was 100% on the Fed side. And then unfortunately, California doesn't conform. So you have to take it over 5 years. So that was probably like one of like the more fun ones I do. But this year's tax strategy has actually been pretty easy now that our business more dialed in, is actually just keep on hiring more people. So I'm just like reinvesting huge back into my team right now. And then the next part was just the marketing too. So all these, like, I like to spend money where it's gonna make me more money.
Yep.
That's like usually where I like to spend my money. I buy some stupid stuff too. Like I've gotten into like these V Friends trading cards from Gary V.
Okay.
Stupid, stupid. I'm like, it's fine, but yeah, we'll all have we're not perfect, but because I know like my ROI on an employee, like we have revenue metrics they need to meet. So I'm gonna get my money back on that. And then marketing, I haven't quite figured out like my return on ad spend. So I don't know, Facebook is just eating my money right now, but we're trying it out there. So that's where I like to put all the money back into. And then and then I toned down real estate this year. Prior years we had some real estate going through,
Mhm.
but haven't done too much on that side. So those are the primary things. I might put my mom and dad on payroll
Okay.
to do some income shifting. Like my dad's been helping around at the house, so I might do some income shifting towards them because they just recently retired. So at like a way lower tax bracket. So like for example, if you're at like the 32% bracket and then your parents, the first like 30 grand you pay them is like zero because the standard deduction's 30 grand.
Mhm.
So I could like pay them 30 grand and then like, oh, dude, do whatever you want with it. And then they'll pay zero on taxes on that side. I get a 30K write off at 30%, save $9,000 in taxes. So some income shifting is really big. That's the whole like pay your kids thing that you always
Mhm.
hear about. I got no kids. I have a dog, right? We got dogs right now. We don't have kids.
Yeah.
So can't pay a dog yet.
What's the information regarding the kids? Or do they have to be a certain age? What's the things that they can do in order to write them off as far as like labor?
Yeah. Yeah. Kids wise, so court cases always stem back to 7 years old is when a good age is to have. But with like today's like kids and what they can do, like you can have like a lot of like influencer folks, right? Their babies are in their content. You could use that, say per video. Say if you had to do a baby model, it's like $200. And say you did like, I don't know, 10 videos a month, that's like 2K. So a 2K retainer over 12 months, that's 24K you could write off. So yeah, it depends on like what the child actually does. But just make it like a real rate, document it, have a job description, and actually pay them the money towards that side would be good. So it's like great thing to do, learn about, but the like doing it sucks. It's like kind of like, yeah, you want to be ripped with 6 pack abs, but who and their mom's trying to starve and do cardio? Ain't no one, right?
Yeah.
There's a select few,
Yeah.
right? Don't get me wrong, but it's to actually achieve the result. It sucks to do,
Mhm.
but it's not bad if you have like the right like documentation. We have like templates and everything ready for our clients that want to like go down this path. But it's a journey for sure. But yeah, kids, it varies a ton, and then just make sure the rate is normal. Like, don't pay your kid, your 7-year-old, $100 an hour to clean. Like, once again, pair it towards fair market value. So
Mhm.
if you got to hire a cleaner and they charge you $50 an hour, all right, cool. The kid can charge you $50 an hour. Whatever you're willing to pay someone else to, and it can be seen in the market like that, and then you can actually use that expense.
And is it per kid or is it capped out like per household? Like
Oh,
if you
yeah.
have 10 kids, can you do all 10 kids?
All 10 kids, yeah.
Damn.
Yeah, my mom did this back in the day when I was working at a restaurant. I was making nothing, dude. It was like, I think she paid me like $500 for, I probably worked, man, I can't even remember. That was all Saturday, Sunday, Friday nights. What's that? 12, 24, 4, 28 times 2 is 56, 128 hours for $500.
Mm-hmm.
What's that, like $4 an hour, $5 an hour?
Yep.
Yeah. But I made tips though. So, but tips were like lame back in the day. Like now, dude, I didn't realize like, until like recently, like the standard's like 18% now. Like back in the day, it was like 15%, but like in Fairmont, Minnesota, like where I grew up, it was like one person, $1. So I was like, all right, if it's a 2-person table, I'm like, I prayed to get like $2 out of it. I'm like, please, can I get a $2 tip? I was like 16 at the time, but I was like, didn't know better, but humble beginnings, which is nice. So I was like, oh, sweet, $1 is a dollar.
Yeah, it's crazy.
hmm
What's one book that you think every entrepreneur should read about money or taxes?
Ooh, money or taxes? Oh, so tax wise, there's not a lot of good books. There's the Tom Wheelwright's dang, I forgot what tax free wealth. I think that's his. That's Robert Kiyosaki's CPA.
Mm.
So I read that as a CPA myself, and like I hated it. Kind. It was like dangling a carrot in front of you, but not actually giving you any tactical things to do or like knowledge to do. Like it was like enough for you to be educated for you to reach out to a professional because they run a massive firm, by the way. So it was more of like a marketing tool. And I really hated it. Like I knew what he meant in all of it because like I know how to do it. But like if I was like a normal consumer, like I wouldn't waste my money on that book. Money wise, man, money wise, that's a good question. Money wise, I mean, there was always the classic like what's the other one?
Rich Dad Poor Dad,
There's that one. I
Simple
read that
Path to
one.
Wealth. I don't know
Yeah.
if you've read that one. That was another one that I read in the beginning.
Yeah. I think the one that probably resonates the most with me at this moment of my life is the Dan Martell one, the Buy Back Your Time.
Yep.
Yeah. So I got that recommendation from Jenny actually. She's like, yeah, read this. I'm like, all right, fine. So then I had like this flight all the way down to Paraguay. Dude, and no internet on the plane. I was like, oh my God, thank God I bought this book. Read the whole thing, listened to the whole thing. I was like, oh, this thing's got some good like things behind it. Then I started like going in and started implementing everything. And it's been game changer for me just in terms of like how to recognize what my own value was and to hire other people that do it. I was just too cheap before, like honestly speaking, like because I'm like from Minnesota, like everyone in Minnesota, dude, they just do their own work. Like you gonna paint the house, do the floors, you call up the buddies, you get the beer, and be like, yo, bro, can you come and help? Like no one pays for services in that state. Nothing wrong. And also, there's nothing to do in the state.
Yeah.
So like you don't value your time because of that. And then like my parents were always like, hey, just do it yourself, right? Don't hire people. So I had that mentality up until maybe a few years ago. The like light bulb switch though was I was always too cheap to buy internet on a plane. And then I was like, I was drowning in work then though. I was
Mhm.
like, and it was only a flight from Santa Ana to Oakland. And then it was like an hour and a half. I was like, is this $8 worth it? But I was like, so like, dude, I'm drowning. I need to check my emails because I was down there for like friends.
Yeah.
So I bought the $8 internet. And then I just started going through emails and I like closed like a consult deal and it was like $300. And I was
Yeah.
like, oh, okay, that's enough internet for like the next 5 years of my life.
Mm-hmm.
And I was like, oh, now you can leverage your time more. And then also like later, I'm like, oh, understanding like what is your rate and what's your buyback rate?
Yep.
I'm like, oh, okay, stop being cheap, dude. Like it's just one big thing. So now I'm like, knowing that philosophy, I'm like, hey, just go out and go get it. Like at the end of the day, I was talking to one of my guys. We're gonna probably go to India to visit our team. And I was like, I looked at the flight. I was like, this is 24 hours. I'm like, I'm gonna die.
Private, right
yeah.
off.
Right? Yeah. So then I was like, looked at first class flights for those beds that lay down. Right. And then it was like 3K. I was like, hey, Cole, if you want to sell $3,000 of services, I'm going to go take some like calls and sell $3,000 of services. You can buy yourself a first class flight on the firm. I don't care.
Mm-hmm.
Cause I'm like, we need to visit the team just to like build morale. But I'm like 24, I've never been on a plane for 24 hours. I went to China, but I don't think that was 24 hours.
Wait, it's a 24-hour straight flight?
Yeah. From SF to India.
Nonstop.
Yeah.
Holy shit. I didn't know that it existed. I thought the longest flight was from here to like Singapore.
Yeah.
And that's like, I think like 18 or 19 hours. I didn't know there's a straight flight 24 hours.
Yeah. I was like, huh, what? I was like, oh my God, I've never been on a plane that long in my life. Like I went to New York a couple of weeks ago. I was just hurting, dude. Like, so that's like where I'm like, okay, cool. If you know like how much time you can use to sell work. So I'm like, oh, okay. So like the biggest leverage part of like for yourself, like where can you leverage your time the most to pay someone back? So now that I know that, I'm like, all right, cool. I'm willing to hire way more. Sometimes it doesn't turn out perfect, but it's fine. We're trying it, experimenting it.
Nice. So you're gonna do that business class trip, right? I
Once
hope
I
you do.
once I sell it, yeah. I also need to like mentally prep of like, okay, yeah, 24 hours. But then like Eldar, my COO, he went to India last year, so we're taking turns to like just like train up the team, take the guys out, and then he's like, you should go for like 2 weeks, like minimum. I was like, 2 weeks. I'm like, dude, like I don't know, like because my routine's always the same, like wake up, work
Chill.
out, like work, take the dog out for an hour, like come back work. I just like the routine. I was like, I don't know if I can be away from the dog for 2 weeks.
Yeah.
Yeah. So I'm like, I was like, all right, Cole, you want to go first? So we're just like drawing sticks at the farm right now. Like, hey, who wants to go hang out with the dudes over there?
That's awesome.
Mm-hmm.
What's your biggest piece? I know you're talking about buying back your time from Dan Martell and all that stuff, but what's another biggest piece of advice that you'd give to people who maybe are looking to get into entrepreneurship, make that jump from W-2 into solopreneur?
Yeah, I'd say like at the end of the day, it's like your life. Like sit down for yourself. Like I told someone this last week. I was like, hey, hop on a hike, like leave the house at 5 a.m., bring a notebook or bring your notes on your thing and be like, are you happy? Like genuinely answer that question. Like don't lie to yourself. Like, are you happy? If you're happy with what you're doing today, cool. Just continue on. Check on it. If you're not happy or you have the slightest part of not being happy, then you need to change. And that change, generally speaking, is going to be down the path of like entrepreneurship, real estate, like kind of from an order of operations. I actually like more income producing, trade my time and then invest. So like I didn't really learn this till I went to the Hermosi workshop like last year. And I like we were able to ask like all these like questions to our portfolio team. And I was like, oh, should I like buy another accounting firm? Should I like buy in real estate and whatnot? And then they just asked me back, like, well, what's your ROI on your employees versus how much you're going to get from the accounting firm versus how much you can get in real estate? And I'm like, oh, duh. All right. And then after that, I kind of stopped investing in anything really.
Yeah.
Because I'm like, oh, okay, cool. If you know how much that you want to make, you can go get it. And then at the same time, too, like, what's the biggest, highest return of your time? So I was like, okay, biggest, highest return of my time was like, hey, I'm just going to keep on selling work and trading my time for that. So then I can later invest in real estate. So I really like what you're doing. Like, hey, I'm going to do the flips. That's going to generate me way more cash. Then I can invest in passive income down the road if I want. Because like your flip, say if that's, I don't know, 40% return, but then you do a long-term rental, it's like 7%.
Yeah, it
like,
takes forever too.
Takes forever. So there's to me, there's an order of operations. So I'd say like, to go back to the original question, like if you're happy, cool, keep on doing, live your best life. If you're not happy, go into doing a side hustle of what you already know. So the next question is going to be like, well, what do I do? Whatever makes you happy is like the big thing. I'm very big on the happiness. My uncle passed like 4 years ago. And then he was just very much like, that kind of like changed. I used to be like team grind, no nonstop, like who cares about work-life balance? Who cares about sleep, everything? I'm like, oh, after that, okay, I should probably live my life a little bit more. And I was like, just do the things that make you happy because you're actually going to care to do it when the time gets rough or on the weekends and nights, you're willing to sacrifice for it. So like I always tell most people like, hey, what do you do as a profession today? All right, can that be done as a side hustle? Yes, no. Okay, no. Okay, next, what can make you happy doing? Can you flip stuff? Can you like go? I got one dude, he's starting up a lawn mowing business. He called me the other day. He's like, all right, I want to buy a Jeep. We can get like the I can't remember the mower, the rider. He's like, I'm gonna 21-inch like push and then like the trimmer. And then he's like, I just love it. I'm like, because he runs a super successful coaching company. I'm like, it's like in my head, I'm like, you make way more money. He's like, yeah, it's just in my zone, like Zen state though. He just likes it. So he's gonna mow lawns for like 50, $60 a lawn and have fun. So just find whatever makes you happy and just make some extra money that way. And then that's the cool part of how it ties back into tax though. Because when you have a side hustle, you can write off way more. So you write off your car, write off your cell phone, internet, all those classic expenses that you can do now become write-offs. And then how you want to think about write-offs is that anything you can write off in life is actually a discount. So if your tax rate is 30% and you buy the new iPhone for $1,000 and you write it off, it's only really $700, right? Because it's a discount. But if you're W-2, you can't.
Yeah.
the phone's $1,000. So some side hustle is better than no side hustle. Plus, spare change is cool. Like having it on the side, like, all right, you can afford to do some more things in life.
So just to summarize everything, really focus on doing something you really love. increasing your active income, because active income, trading your time for money, is much better than just, say, saving a bunch of money, buying a passive income thing that generates much lower returns. And I think another thing that I really loved, I learned from Calvin and Jenny, is to do a vivid vision. Kind of think about how you want your life to be 3 to 5 years from now, and reverse engineer everything. And everything, your goals, your actions daily should be geared towards that thing specifically, instead of just like doing things and like there's an order to, like, say I'm doing something now, and then later you figure out, why am I even doing this? And you realize that all the stuff that you're doing in the first place doesn't even align with the why that you have. And so I think learning and to do this why first and then reverse engineering it is also really important too.
Oh, amen, man. Hit it right in the head there.
Yep. Well, Tony, it's been an absolute pleasure. I've gained so much knowledge, and I know the listeners will too. What's the best way for the people to get a hold of you or connect with you?
Yeah, best way. Everything's the CPA Dude. So probably Instagram's probably the easiest. Yeah, so we're just the CPA Dude _ there. And then email is Tony at the CPADude.com. And then TikTok's the CPA Dude. So those are the primary three.
Okay, awesome. Well, everyone, thank you guys for tuning in. I really appreciate you guys. As always, keep going, keep taking action. We'll see you guys in the next one. Peace.